Hi, it's Dean Odell with 7 Gables Real Estate and the Odell Group. Welcome to Tustin Talks. Today is July 30th. Got a lot to talk about. We are going to talk about how is this market going to change and when is it going to change? What are the indications that it's going to change? So let's get started with the charts right now. Okay, so this first chart is going to be the first time I've showed this. It is the Housing Affordability Index charted, and it goes all the way back to the year 2000. What I want you guys to look at is from 2010 on. You can look at the rest of that chart if you like, but we're focusing mostly on 2010 and on. And what you'll notice in 2010 is about nearly 60% of the people could afford a median priced home in Orange County. Now, mind you, rates were 4.5% back then, and prices were $475,000 for a median priced home, and I know we all wish it was still that way. So let's talk about where we are now. We are at a median price of $1.13 million and affordability at 39%. So we've gone from 60% of the people being able to afford a median priced home to 39% of the people being able to afford a median priced home. And what's helped with that, of course, is that rates are at 3%. Okay, so let's keep that in mind and talk about what does the median mean? Well, the median is just the middle price. If you took all the prices that have sold, you put them in a line, you take the one right in the middle, okay? And that is the median. So I like average sales price a little bit better than median, but a lot of times they do come out to being close to the same number. And right now, this is what's published, so I'm going with this. Okay, so let's talk about how with only 39% of the people being able to afford a median priced home, how that translates into today's market. So let's go to the next chart. Everything is a function of supply and demand. Let's look at the Orange County active listing inventory. Not much has changed here. We still have historically low amounts of inventory. Only 2,537 homes in the midst of summer that are here for sale right now. If we take out last year being a weird year, the average for this time of year, the 5 years previous, is 6,916 homes. So look at how far fewer homes we have. Now last year we had 4,590, but that was because everything started to, kind of come late because of what went on last year. Everything started in March and everything shut down for almost 3 months, and then people finally started to get some homes on the market. But either way, this is a phenomenon in Orange County that's gone on throughout the whole last decade. Maybe not to this severity, but if you go back the previous 10 years, Orange County has had 16,158 less listings hit the market. People just are not moving from this area, and we know why. It's a nice area, right? But at what point do you say it's time to pick up the chips and go, right? Or maybe I'm going to move up, maybe I'm going to move out. For people moving out, it's a no-brainer, right? So let's go to the next chart. So Orange County demand year over year. Let's not forget last year was a strange year, and this year we have so far fewer homes to choose from. Demand is going to be down because there's just not enough houses out there for the demand that's out there right now. 3,200 homes in escrow last year at this time, now 2,812. So this is up 2% since we last reported, but it's up 14% from last year. Hey, sorry to interrupt this program, but we want to make sure you are subscribed to Tustin Talk, so please click on the subscribe button below. And then if that doesn't work, just go to theodellgroup.com, or you can go to youtube.com/Tustin Talks. Now let's get you back to the program. Okay, this is a chart I don't show very often. This is total pending sales. And total pending sales, the way that differs from demand is we measure demand on what's going on, right? The last 30 days. Pending sales is like what is totally in escrow, everything that's in escrow. So right now we have approximately 3,600 homes in escrow. And mind you, we only have 2,500 homes or so for sale. So we actually have more homes in escrow than we do homes to sell. So therein lies the problem. Let's move to the next one. This is another chart I want to show you. Don't show very often. It's Orange County closed sales year over year, just looking at the last few years. Focus on a color. whatever color is the year you're looking at. So, you know, orange is 2018. Just follow the oranges. Look at the pattern. Just follow it, follow it, follow it. Do the same thing for the purples in 2019 and so on. And what you're going to see when it comes to this year in 2021 is that we have had higher closed sales up until this point in the market than we ever have. And whether that was from the delayed response from last year, which I believe that is a lot of it, and lower interest rates help as well. But you can kind of see what the normal patterns are, and you can kind of see that from here on out, the remaining of the year, gonna be maybe fairly steady, might go up just a little bit, but then, you know, come November, that's when sales will start to drop. Another chart I don't normally show, but want to point out to you guys is Orange County luxury closed sales. Look at the absolute spike. Due to interest rates, due to prices being higher than they are, luxury sales are considered anything over $1.5 million, but look at where we are now compared to where we normally are or have been. You can see that people are just paying more for houses, buying more expensive homes. This is a result of people's needs changing from last year and deciding that they want to be somewhere more permanent. Lots of factors going on here. This also contributes to the median price being higher, because when you have a lot more higher priced homes selling and you start lining those numbers up and you pick the midpoint's going to be a little higher. That's why I like the average price. I like average price to just kind of see what's been going on. Even average price per square foot is a good thing to take a look at. Not to value homes. Gives you an idea in valuing homes, but it is not an absolute way to value homes. But it gives you get a range for valuing and then an average of what sold over the years and compare that. Didn't do that. Maybe in a new Tustin Talks we'll do that. Expected marketing time is a function of demand, okay? So if we look at the demand and we look at that relative to the supply, that gives us like months of inventory and everything, but we also want to look at the expected marketing time to understand how hot the market is. And if you look at this chart, you see that we are in an extremely hot market. The average time to sell your home is only 27 days right now, and that's been holding steady. So let's talk about where the market's going, where it's headed, how long can this sustain? Well, let's start with this chart. This is expected marketing time in 2021 versus 2006 and 2007. You can see right now we're at 27 days. In 2006 and 2007, when in hindsight we can look back and say, well, we know that the market was blowing up at that point, that things were overvalued and everything. What was our expected marketing time back then? Well, in 2006, it was 200 days. In 2007, it was almost 300 days. So if you look at these charts and you look at the legend there, you can see that those are deep buyer markets. I mean, we're nowhere even close to that. We're in the hottest sellers market we've ever been in. So to get things to reverse course and all of a sudden turn into this kind of market, it's gonna take a while, right? Even with the low affordability that we have, because there is so much demand. There's so many more people than there was back then that are wanting to move to Orange County. Another good comparison to take a look at is how many people have equity now versus then. Almost 100% of the people have equity now. 64% of the people had no equity when they were selling back there in that kind of market. So we are nowhere near that kind of market, and that's what I wanted to demonstrate to you guys. Okay, so what is going to change this market? Okay, well, the only thing that's going to change this market is going to be either prices continue to rise and it's just harder and less affordable for more people, or we get some kind of blip in the economy or some kind of world event. But right now, everything we see from a data standpoint indicates that this market is going to continue for a while. So buyers, I don't think sitting around waiting is the best strategy. Take advantage of these interest rates and buy. Sellers, it's up to you. Obviously, it's your house. Are you ready to leave Orange County? If you're ready to leave Orange County, there's never been a better time to do it. You just got to pull the trigger. It's time. If it's time for you, let's give us a call and we will help you to get that house ready, get it on the market, and get the most money for it. All right? So that's it for this Tustin Talks. We'll see you guys next week. Thanks. Bye-bye. Hey, don't forget the Odell Group is one of the top 10 teams in Orange County. We have sold thousands of homes. So draw from our experience and let us help you out. Subscribe right now and watch our videos to educate yourself whether you're a buyer, seller, or both. And then visit our website at theodellgroup.com and reach out and let's get to know each other so we can help you. All right? Thanks. Bye-bye.